Ladies and gentlemen, good day and welcome to the Q2 and H1 FY'25 earnings conference call of Rupa and Company Limited, hosted by Orient Capital. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit from Orient Capital. Thank you, and over to you, sir.
Thank you, Nikita. Good evening, everyone. I welcome you all to the earnings conference call to discuss Q2 and H1 FY results of Rupa and Company Limited. To discuss the result, we have from the management Mr. Ramesh Agarwal, Full-Time Director, Mr. Sumit Khowala, CFO, and Mr. Aryan Kumar Baid, Vice President Finance. They will take you through the results and business performance, after which we will proceed for question and answer session. Before we proceed with the call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. For more details, kindly refer to investor presentation and other filings that can be found on the company's website. With this, I now hand over the call to the management for their opening remarks. Over to you, sir.
Thank you. Good evening, ladies and gentlemen. On behalf of Rupa and Company, I would warmly welcome all of you to this call. We appreciate your time and interest in reviewing our company's performance. I trust that everyone had a chance to look over the financial results and investor presentation that have been uploaded on the stock exchange. The industry continues to witness aggressive pricing strategies and resistance for price increase post stabilization of yarn prices. Other factors like excessive rainfall in the month of August and September in certain parts and other regional disruptions impacted discretionary spending this quarter, and therefore demand usually associated with Q2 has partially been shifted to Q3. However, despite these headwinds, we have managed to navigate and deliver stable performance in the first half of FY'25. An overview of our company's performance is as follows. Revenues stood almost flat at 297 crores, and there was a small volume growth of 2%. EBITDA stood at 29 crores and margin stood at 9.6% for the quarter. Our volumes in H1 FY'25 grew by 5%, backed by strong sales in economy segment, which grew by 12%. The athleisure segment also showed promising volume growth of 35% in the first half of the fiscal year. This is a testament of our commitment to offering high-quality products that resonate with discerning consumers. Revenues from modern trade also demonstrated robust growth of around 35% in H1 FY'25, contributing 7% to the overall revenue. This underscores our strong presence on major online platforms. Additionally, we have also observed significant growth in X factors areas, which stood at 25% in H1, underscoring our successful utilization of diverse revenue streams. We have made proactive efforts to enhance our brand visibility through strategic marketing activities and have invested approximately around 7%, which comes to around 33 crores in branding and advertising of our revenues of H1. On the EBO front, the EBO count have reached around 31, and we hopefully should reach around 50 EBOs this fiscal. We anticipate our revenue growth to be in the range of between 10 to 12% for H2 FY'25. We are also on the guard to cover the deficit of H1 FY'25. Our EBITDA guidance will be in the range of 10 to 11% for FY'25. Looking ahead, we aspire to achieve new business milestones and introduce innovative products across our diverse customer segments. Our commitments to a customer-first approach will reinforce our industry footprints and support our sustainable business model. We are excited about the future and dedicated to delivering long-term value to the stakeholders. With that, I would now conclude my speech and would like to hand over the floor to our CFO, Mr. Sumit Kovala, to brief you about the financial performance. Over to you, Sumit. Thank you.
Thank you, sir. And hello, everyone, and thank you for joining us for our Q2 and H1 FY'25 earnings call. I will be providing brief overview of our financial performance for the quarter. Coming to the quarterly performance, revenue from operations for Q2 FY'25 stood at 297 crores, grew by 1.6% year-on-year. The EBITDA for the quarter stood at 29 crores as compared to 32 crores same period last year, registering a degrowth of 12% year-on-year basis. EBITDA margin for the quarter stood at 9.6% for the quarter, down by 110 basis points year-on-year. The net profit for the quarter stood at 18 crore against rupees 21 crore in Q2 FY'24, which degrew by 10% year-on-year. PAT margins for the quarter stood at 6.2, down by 60 basis points year-on-year. Coming to half-yearly performance, revenue from operations for H1 FY'25 stood at 507 crores, grew by 2% year-on-year. The EBITDA for the quarter stood at 47 crores as compared to 44 crores same period last year, registering a growth of 6% year-on-year. EBITDA margin for the half year stood at 9.2% and up by 40 basis points year-on-year. The net profit for the half year stood at 29 crores against 25 crores in H1 FY'24, grew by 17% year-on-year. PAT margin for the quarter stood at 5.7%, up by 70 basis points. Our net debt stands on H1 FY'25 is rupees 20 crores. Our working capital as on H1 FY'25 stands at 790 crores. Working capital days for H1 FY'25 is 228 days. With this, I now conclude my speech and open.
Hello, sir.
Yeah.
Yes, sir. Please go ahead. Also, we are not able to.
The floor for question and answer session. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saloni Shah from SK Investment. Please go ahead.
Hello, sir. Good afternoon. Thanks for giving me this opportunity. So, what is our capex guidance for FY'25?
There is no major capex plan as such for FY'25. There will be a routine capex of around 15-20 crores.
Okay, sir. Sir, and do we have any plans to do capex across our manufacturing facilities, maybe in the renewable space?
Yeah, in renewable space, the company is in process of installing solar plant in its Domjur unit, and the capacity of the plant is around 1.8 megawatt, and the same is likely to be commissioned in January 25.
Okay, sir. All right. Thank you, sir.
And the same is on the OPEX model, not in the CAPEX model.
Okay, sir. Okay. Thank you so much.
Thank you. The next question is from the line of Darshan Shah from EBC Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. I just have a couple of questions. Firstly, what is our current thermal order book and how did this segment perform in the current quarter, Q2?
Q2 thermal performance was not so good because the season has shifted. So we expect this quarter to be better than as compared to last year because Q2 was not so encouraging. So hopefully this quarter will make up for the lost sales in Q2.
Okay. Thank you so much, sir. Another question would be on that same segment as well, thermal. As you said, the quarter 3 would be better. What are we expecting post Q3? Will this segment perform in the same manner, or how will the segment contribute?
As I said, that we hopefully would cover the loss in sales for Q2. So hopefully we will show some growth in Q3 Means overall, between the last 3 quarters of the last year and the 3 quarters of this year, we will show a growth in thermal, hopefully. We expect that.
Thank you. Thank you so much. Thank you.
Thank you. The next question is from the line of Sahil Bora from MNS Associates. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. I just had one question. Sir, can you provide us with the details of performance of our subsidiary companies this quarter? Has the recent disruptions in Bangladesh affected our business there?
We have opened a subsidiary in Bangladesh. It's been running for last 4 years, but there is no business in that company. We had incorporated and hopefully, under the hope that we will be able to do something. But till now, we are not doing any business in that company.
Regarding performance, we have 5 subsidiaries, out of which 3 subsidiaries having a EBITDA positive and 2 have negligible EBITDA.
Okay, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Hitanshi Agrawal from ABS Associates. Please go ahead.
Hello, am I audible?
Yes, you are audible.
Go ahead, ma'am. Please go ahead.
Hi, thank you for the opportunity. So my question is, can you provide us with the volume-wise segment growth for the quarter as well as for the half year?
The volume growth for the quarter 2 in economic segment is around 6%. For mid-premium, it's degrew by 2%, and for premium segment, it's degrew by 10%. And for H1, the volume growth for the economic segment is around 12%. For mid-premium, it's degrew by 2%, and for premium, it's degrew by 3%.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, participants who wish to ask questions may please press star and 1. The next question is from the line of Rajesh Jain from LV Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for the opportunity. Am I audible? Hello?
Yes, you are audible.
So I just wanted to understand, in last quarter, you have guided to do revenues in the range of 18 to 20%, but now you have revised the same. So can we know the reasons behind this? And so,
see, the primary reason for this revision is we expected the yarn prices to go up, but yarn prices even today also it is not stable. It is the mood is very, very towards a downtrend, but it's not going down, it's not going up. So the overall trend in the yarn prices does not look very encouraging. So we were forced to revise the estimates.
Understood, sir. And what will be our growth target in 2 to 3 years down the line?
The market is quite competitive, but at the same time, there is enough opportunity in this market. For a company like us, we always aspire to grow with a 12 to 15% CAGR growth. For this, we have put in all the efforts to grow at this rate. Some of the key drivers for this growth will be modern trade, women's wear, athleisure wear, and international trade.
All right, sir. And one more thing that I wanted to ask is, our EBO count has increased this quarter. So,
your voice is breaking, please.
Is it fine now?
No, we are not getting you, sir.
Sorry for interrupting you, sir. Your voice is not clear.
Is it fine now?
Yeah, it is now.
Yeah. So just wanted to understand, our EBO count has increased this quarter, and how many stores are we expecting to be opened in FY'25?
Around 50 stores. We are at 31 now, so we hopefully should be closing at 50.
Okay, so and also can you throw some color on the impact of these EBOs in our revenues that we are
EBOs, there are only 1 or 2 company-owned EBOs. Rest all are franchisee-owned and without any MG. So the impact on revenue as such would not be very much, but the impact of brand awareness would be high.
All right, sir. Thank you, and all the very best, sir. Thank you.
Thank you. The next question is from the line of Rehan from Equity Capital. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes, please.
So I had a question on the gross margins. In Q1, we reported about, I think, 35-36% gross margins, and in Q2, we've reported about 28%-29% gross margins.
Yeah.
So even if I assume that you mentioned the volume growth of about 2%, so that means our value degrew by about 3.5%. So basically, are we seeing almost a 5% fluctuation in the raw material side, or what has impacted our margins so drastically?
This gross margin is all a play of the product mix. So as you would see that our economic segment grew higher than the company's volume growth. That's why the gross margins were low. So, but this will even out in the next quarter, I think. So that gross margin volume would again go up with the mix of sales going up also.
Thermal does not contributed well, so we expect that the thermals will contribute better in quarter 3 and gross margin will improve.
Understood. On this, I wanted to understand further. So are we shifting towards this economy segment? Like, where do we see our strong suit? Is it in the economic segment? Is it in the where do we find our stronger?
That's a seasonal thing. So this whatever loss in premium segment we have seen in volume, I hopefully will cover it up in this quarter only. So there is no shift in the company's brand equity. It is still going strong for premium products also.
Okay. On the demand side, I wanted to understand what active measures, other than you mentioned about the EBOs and modern trade has done really well for us. What active steps are we doing to penetrate further toward the customers?
Ladies and gentlemen, the line for chairperson seems to have disconnected. Please hold while we reconnect. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Please go ahead, sir. Sir, your line has been unmuted.
Thank you so much. So I wanted to understand what steps are we taking actively to penetrate towards the customers and towards our audience, other than the EBOs and a few other things that you mentioned.
We have like 3 superstars in our company. Like we have Ranveer Singh, we have Ranbir Kapoor, and we have Kartik Aaryan. And we are aggressively promoting our brand locally through wall paints, dealer boards, and we are taking out attractive schemes also from time to time and giving good incentives to the dealer to promote the brand.
Okay. To understand one more thing, what is the delta towards the dealers between the other competition that we have? Like, for example, what in terms of margins, what do they earn better from us? Why will they pick Rupa versus the other competitors?
See, it's all about demand and supply. Whether you give them higher margins also, if the product is not selling, they will not take your goods. So our endeavor is to create demand and rather push sales. So we do both. We create the demand also and we push sales also. So it's a mix of both. You cannot say that if you give more discounts, your product will sell more. You have to create that demand also.
Okay. Thank you so much. Thank you.
Thank you. Ladies and gentlemen, participants who wish to ask questions may please press star and 1. The next question is from the line of Ketan from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, we are saying we will grow at around 12% per annum, roughly. So wanted to know how much of this will come from price versus volume?
Now, whatever sales, we are seeing the opposite now. We are seeing a growth in volume versus value. But going forward, I think yarn prices should stabilize, so the ratio between volume and value should be equal.
It would be largely driven by volumes only.
Largely driven by volumes.
Yes.
Okay. And can you throw a bit more color on the sub-segments which you mentioned, namely modern trade, athleisure, women wear. So roughly what is the market size there? How are we, penetrating? How much market share we have? Can you throw some light on that?
See, the market size is not still defined, but there is an immense opportunity which is coming up. We are doing both. We are supplying our brand under the modern trade, and also we are undertaking private white label manufacturing. So we will see a good growth there. We are already seeing a good growth there, and we should double that growth.
Sorry, can you come again? You hope to double the growth?
Didn't get you. Your voice is not audible.
Sorry, just am I audible now?
The voice is not clear.
Hello?
Sorry for interrupting you, sir. Mr. Ketan, your voice is not clear.
Hello, am I audible? Is it better now?
Yeah, it is better now. Tell me.
Yeah. So, sir, I did not catch the last line which you said. So, you are planning to double the growth, but I did not clearly catch that.
Yeah, double the growth in the sense, suppose we grew at 20-30%, that growth would be at 50% maybe, 50-55%. We hopefully should grow in that segment, in the modern trade segment.
Okay, got it. And besides that, the traditional business which we have, so what is roughly how are you envisaging growth rate in that segment?
Growth which will come from a mix of the traditional business and the emerging business, which we call modern trade. So we have to have a mix of everything to be in the market and to grow evenly.
Okay. And sir, just one last question. So, say after 2 to 3 years, how much of our revenue will be contributed by these newer segments? Can you highlight that?
We expect that the modern trade continues to contribute around 12 to 15%, and apart from modern trade, we expect export to be contribute at least 6 to 7%.
Okay, got it. Thank you.
Thank you. Ladies and gentlemen, participant who wish to ask question may please press star and 1. The next question is from the line of Shubhankar Oja from SKS Capital and Research. Please go ahead.
Hi, sir. Thanks for the opportunity. Just quickly, so your opening remarks, you talked about H2 revenue growth guidance of 12%, or was it a FY'25 revenue growth guidance of 12%?
It's for H2. We expect that H2 will be better than H1.
So, okay, great. So which means basically you had a 2% growth in H1 and a 12% growth in H2. So basically for the year, you may end up with about 5 to 6% growth. Is that correct? Hello?
It comes to around 7-8%.
7 to 8%. So earlier we had a 12-15% sort of a growth guidance. Okay, so that's one. Secondly, can you talk a bit about the progress on your Pragati scheme, which I think last time we talked about it was operational in 2 states. Is there any further progress or any other states that you have added in that scheme?
Sorry for interrupting you, sir. Ladies and gentlemen, the line for chairperson seems to have disconnected. Please hold while we reconnect. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management connected.
All right. So the question was with respect to the Pragati scheme. So last quarter end, you talked about it was operational in Odisha and Chhattisgarh. Is there any further progress, any other states that you have added in that scheme?
No. The last time we must have said Rajasthan and Chhattisgarh and some part of UP. So Rajasthan, there is a good response. In some cities we have started, like in Jaipur and few other cities. The response has been very good, and hopefully we should cover the whole of Rajasthan step by step. And going forward, Chhattisgarh is still getting stable. And the next state would be Haryana. It's already under implementation in Haryana. And then next would be Punjab. So whichever states are willing, we are first going there, and then maybe a rub-off effect will come in the other states also. So others will also follow.
Okay. All right. All right. And finally, so your total ad spend for H1 was how much?
It's around 6.5%.
6.5%. And that will be for the entire year also in the same range.
Daily guidance will be in the range of around 7 to 7.5%.
Okay. All right. So thank you. Best of luck.
Thank you. Participant who wish to ask question, may please press star and 1. Participant who wish to ask question, may please press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Sumit Khetani for closing comment. Please go ahead, sir.
Hello. Yeah, thank you for joining us on the call today. I would also like to thank the management for sparing their time and answering all the queries today. We are Orient Capital, Investor Relation Advisors to Rupa and Company Limited. For any queries, please feel free to contact us. Thank you, everyone, and have a great day.
Thank you. Thank you, Sumit. Thank you, everyone. Thank you.
On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.